in my view, this is actually the core defining property of crypto as a whole. Uh, is like regulation or regulatory resistance, like regulatory arbitrage. I think some people are like, oh, crypto is just regulatory arbitrage. It's kind of like a put down. I actually think that's kind of a good thing, right?
Hey everyone, quick shout out to today's sponsor, Namada. Namada is currently entering phase 3 of their mainnet rollout, so make sure you check it out by following the link in today's show notes. We'll talk more about Namada later today, but for now, let's get started. Hey everyone, quick disclaimer before we get into today's episode. Nothing said on Bell Curve is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely our opinions, not financial advice. Our guests and I may hold positions in the companies, funds, or projects discussed. All right, everyone, welcome back to another episode of Bell Curve. Today, I'm talking to Proph3t of MetaDAO. Proph3t, welcome.
Thanks for having me.
Yeah. I'm really excited to talk to you. This episode, the genesis of this was a somewhat frustrated or exasperated tweet that I sent out maybe a week or two ago, which is, I'm sick of all the pessimism on the timeline. I think it's a really interesting time to be alive, and especially an interesting time to be working in crypto. And I think there's a lot of reason for optimism. So I want to just start putting out some more optimistic content around founders that have really interesting new ideas that I think are exciting. And you reached out to me, and I've been super interested in Futarchy for a while. So this feels like a long overdue conversation, actually. And I want to unpack some of the more in the weeds stuff that you're doing with MetaDAO, which I find to be a really interesting project. But can we actually just set the stage and just talk about Futarchy? Because it's a really big idea. I'm sure if you've been kicking around crypto for the last couple months or year, you've probably heard of it, most likely through MetaDAO. But Prabha, can you just set the stage, define Futarchy for us, and what is it about this idea that initially interested you?
Yeah, so Futarchy is actually a pretty simple idea, which is why it's surprising that like people haven't really explored it that much. Which is essentially just make the decision with a market, like use betting markets or speculative markets as a way of making decisions. Like the simplest Futarchy I can think of is like imagine two people are deciding whether or not to get pizza, like Alice and Bob, and Alice is like, hey Bob, I bet that if we go get pizza, like you'll enjoy the pizza. And then if Bob is like, okay, Alice is willing to put money on the line, so like clearly she believes in this, and like they use that to make the decision. In a sense, that's Futarchy. And yeah, so like the core idea is using markets to make decisions. What attracted me to the idea is that I've been a long time market participant, love markets for a long time. And one thing you learn if you participate in markets is that it's pretty hard to beat the market over a long time. And one reason why that is because like the market is already pretty darn good at pricing and information. And yeah, so like when I discovered Futarchy through a YouTube video, where the creator, whose name is Robin Hanson, who now actually advises MetaDAO, when I watched that YouTube video, I was pretty much immediately just like in love with the idea and knew that I needed to work on it.
Hmm. All right. So walk us through. So this idea of Futarchy grasps you quite a bit. And I think to some people, it might sound like a wildly outlandish idea, which is, hey, the way that we make decisions in society
It
is you appoint
is.
experts, right? Yeah, it's a bit of a far cry, right? But actually, when you get down into the weeds of it, it actually does make a bit of sense, especially even on an organizational level. Like from my understanding, one of the key tenets of Futarchy is that there's still some sort of voting mechanism in that your elected representatives or citizens kind of would vote on the big core ideas, right? Like these are the goals for society. And then it's Futarchy that actually is more about the how, right? So what the actual policies are, that gets left up to the market. And what's interesting about that philosophy to me is that that's roughly how it works even at a company as well, which is you have typically a CEO or someone like that. They sort of set the guiding vision and might have a hand in like what the 2 or 3 North Star goals are for the year, but you really delegate the how down to the front lines where the most information exists. And that's very similar actually to the Futarchy construction of, okay, you still have this sort of leader or government or whatever that sets the rough guidelines, but then you cascade the how of the decision making, the policy down to the front lines, aka markets, where there's a lot more information. Is that roughly? Yeah, kind of go one step deeper for us and explain some of the tenets of Futarchy and whether or not you see it, like if what I just described resonates with you.
Sure, yeah. So what you're kind of alluding to is this Robin Henson, yeah, I mean, his motto for Futarchy is vote on values, bet on beliefs. So essentially, like, yeah, for any organization, like to make decisions, you need an objective function. You need something that you're optimizing for. In a country, it might be the welfare of the citizens. In a corporation, it's probably something like the shareholder value. So, yeah, like one way to resolve the question of picking the objective function is to vote on that. Or, I mean, you can, that's not the only way though. Like with MetaDAO and Sanctum, which are what I would consider like the two live DAOs or the two live Futarchies today, the objective function was just kind of picked into creation, which is the token value. Uh, but yeah, essentially you need to pick this objective function and then you can have speculative markets bet on how something would affect that objective function. Similar to like the way we make decisions. We're like, yeah, if you have some objective function, like I want to be happy, and then you have multiple options with a decision like I'm going to use this restaurant example again, like which place do I go? You kind of look at, okay, what is my happiness conditional on each option? What is my happiness conditional on going to the Chinese restaurant? What is my happiness conditional on going to the pizza restaurant? What is my happiness conditional on, and so on and so forth. It's the same thing with Futarchy, where then it's actually there are markets where people bet on what is the objective function. So, and today normally, like what is the value of the token conditional on passing a proposal? What is the value of the token conditional on failing a proposal? It's kind of like the high level idea.
Okay, so this is maybe like a little bit in the weeds here, but how specific do you get with the object? Like from your perspective, I guess, and maybe we can draw a little bit on your early experience here with MetaDAO. Is how specific? Like how many when you're defining this objective function? Like at a company, it's ultimately always something like the share price, right? Like you're always doing this to benefit the stock, but
Mm-hmm.
generally the leadership sets kind of okay. There's a perspective here of these are the things that I think will move the needle for the year, right? And that generally comes from either one person or a very small group of people. But then there are many, many decisions which get made about, okay, so for Blockworks, maybe it's, the goal is to be the number one, we want to focus on data, on-chain data, because we think that's what's going to drive the most equity value for the business. And so outside, like that decision tends to get made at sort of the higher level, but then the how we do that of becoming the best on-chain data provider, we cascade that down to the front lines. So I guess in a Futarchy system here, right, there's always the kind of implicit goal for every kind of company. It's the same, which is the equity value of the share price. Then there are typically these kind of higher level guideline decision goals for an organization. And then there's like a million little frontline decisions that get made all the time, which is, I would say, kind of the how, the why, and the objective function. So what help me fit that framework that at least I'm very familiar with in a company setting onto a Futarchy framework.
Sure. So I would say today, Futarchy is doing much of what like the board or the CEO would do of a company, as in it's
Mm.
deciding like, should we do this project or like financial decisions? So, like, should we allocate tokens to a liquidity mining program? Or in second case, they're like deciding whether or not to allocate tokens actually to people who participate in governance, like who participate in Futarchy, which is, yeah, I guess in a typical company, if companies had tokens, that would probably be a board level decision. And we've done a little bit of the like frontline decisions, like these small tactical things. Like you can still use markets for that, right? Like in theory, you can use markets for pretty much any decision. Like you could use a market for what you should wear in the morning, or like whether you should approve a GitHub pull request. But I think right now our main focus has been on the high level decisions, like board level.
Super interesting. Yeah. So, one thing that I always think about when it comes to Futarchy is, and this is some of the pushback that you hear in general, is there's this fear that people are going to manipulate markets, right? Like if in an organization, I guess the hurdle rate for making good decisions, right, is there's some sort of hiring process. You hopefully have other competent people, and so the people that ultimately end up making those decisions have to work their way up or get some actual IRL frictions through to be in a decision making position. In this instance, anyone who has access to capital basically can make decisions, and you would hope, right, the incentive mechanism is positive there that someone that has capital and they put it to work to make decisions are aligned with the outcome, but there are attack vectors here as well, where you could maybe destroy equity value in an organization and profit by some other way. Simplest would be like shorting the organization or something like that. So how would you respond to
Mhm.
maybe some of the some of those concerns around Futarchy?
Sure. Yeah. So manipulation is not as big of an issue as one would originally think, simply because markets are, and I expect manipulation to also like to be less and less of a problem over time, given that markets themselves have inbuilt incentives that are like correct manipulation. In that, if you manipulate a market, say like you're in poly market, and let's just pick on the Taiwan market. Like there's a market, I believe, right now on whether China will invade Taiwan. Say you, Michael, you want to convince people for whatever reason that the odds are actually 20% when right now the price in poly market is 10%. Um, you could then take a bunch of money and bid up yes. Like you could go buy a bunch of yes, and in the short term, that would certainly move up the price towards your goal. Like if you put in, I would guess on that market probably a few, maybe like $100,000 would move it up in the short term to like 20%, where I think it's right now around 10% odds. But the problem you run into is that then anyone else looking at that market, if they don't think that there's any new information that's come out, they have an incentive to take the other side of the bet. They have an incentive to
Mm,
go and like buy no, which is actually what happens. So like, yeah, several times people have tried to manipulate poly market, like in the middle of the night, by
yeah.
to move prices, and it has historically been self correcting within like 15 minutes.
Mm,
In equity markets, we have like flash crashes occasionally where someone will try to manipulate an equity index so that they can like get some derivative payoff, or like some they can profit on their derivative trades. And yeah, normally it like self corrects within 15 or so minutes. Once people realize, okay, this is just like a manipulation, it's not something fundamental that's happened. Like there's not a war or something that has just occurred or has like started.
mm,
Um, and then yeah, we've already seen this in Futarchy where yeah, like early on in MetaDAO's life cycle, MetaDAO is itself a Futarchy. Um, Ben Hawkins, who works for the Solana Foundation, he created a proposal to MetaDAO to buy the native token at below the book value or below the spot price. So it was a good deal for him, bad deal for the DAO. And he spent $250,000, which at the time was a third of the market cap of the project, bidding in the pass market in order to get, so essentially manipulating it like to try to get it to pass. And the problem we ran into was this problem of like, if you place high bids, people like to sell into them because then they can make money by placing in the high bids.
mm.
Right? Like, yeah,
So here's another thing. I want to actually draw like the question that I want to lead to here is how where do you see the line? Because there's a commonality here in between, at least the way that I look at it, like Futarchy and prediction markets and some of these other new market structures that we're trying in crypto. But I want to get a sense, like one thing that if you look at markets, essentially what we're talking about here is price discovery, right? Which is in
yep,
markets, that's price discovery of asset value. And this would be price discovery, the equivalent of price discovery of who has the best idea. And so, when I think about price discovery from a market mechanism, what you need is liquidity. So
yep.
one, how do you think about drawing liquidity into making these decisions? For something like the president of the United States, I would imagine it's very easy. For maybe a less known, new startup like MetaDAO, I would imagine it's a little bit more difficult. And then even in the end state, markets that are more, they're always going to have a discrepancy in terms of where the liquidity goes. And I would guess that the more like liquidity there is around idea price discovery, the better the decisions are that ultimately end up getting made. So do you view like in a Futarchy sort of world, are the decisions that are the most important, that have the most liquidity and attention moving towards them, always kind of done better? And then will in Futarchy areas where there's just less interest or eyeballs or liquidity, does the decision making struggle, or is it worse in some way?
Yeah, I think over the long term, there's a positive correlation between liquidity in decision markets and like the quality of decision markets,
Yeah.
as in like the quality of the signal that they output and whether or not they're making good decisions. In and essentially like where we're at in terms of liquidity, we're kind of like pre Ether Delta Ethereum DeFi. Like we're really early in that, and like markets just take time to form. Um, I think as we get more DAOs, not to say that like, I mean, markets have already formed to some extent in that like, yeah, I guess when we started, it was all just like people are still figuring out how to trade and don't know what to trade. Now, like we've done more than $3 million of volume, and there are like a few people that run bots that like arbitrage the markets. So like those are some interesting data points in terms of market formation. But yeah, definitely like pre Ether Delta Ethereum DeFi, in that like liquidity life cycle. And in the short term, I actually don't know if liquidity matters that much because it seems like a big reason why the people who do participate in Futarchy like to participate is that it's this kind of fun game of trying to like manipulate, like trying to get it to go your direction. And it's much easier or maybe more fun to play that game if you can move the price, which is easier to do when it's low liquidity. Um, so yeah, I'm not sure like if today more liquidity would necessarily help. I would assume yeah, more liquidity probably on average would help, but you also lose this like fun aspect of it.
This episode is brought to you by Namada. Namada is the shielded asset hub rewarding you for protecting the multi-chain. Shield your data across any asset and any chain and get shielding rewards for helping strengthen data protection for everyone. To learn more, follow the link in the description below. Today's episode is brought to you by Ledger, the global leader in digital asset security. Celebrating 10 years of innovation, Ledger is trusted by 7 million users, secures 20% of the world's digital assets, and remains the most secure hardware wallet for your crypto and logins. Follow the link in this episode's show notes to grab your Ledger today. Maybe do you envision a scenario in the future here where perhaps for really large actual societal level decisions, it's almost the inverse of what it is today, and you apply a futarchy sort of framework where okay, to take the extreme, if we're deciding on the president of the United States, who that's going to be, maybe we decide a futarchy type scenario gets us to a better place than just like open, feels heretical to say, right? But like a more representative democracy or the electoral college or whatever framework we have in place today. We're not worried that there's going to be a lot of eyeballs and attention and dollars that get put into that race. And that might sound uncomfortable to people on the first blush, but I think if you looked at it, that's already essentially what happens, right? It just happens more by proxy. So maybe there's a world where, because of just to like, there are super PACs, right? That actual dollars that get donated there. There are people in high positions that use their influence, right? So, influencing of decision making happens either way. You could make I think you could make pros and cons in either direction, but maybe for some of the decisions at smaller companies or where less eyeballs are going to go, maybe more of a legacy system remains in place, right? Because essentially less good price discovery here means less good decisions get made. So do you envision like a patchwork sort of system here in the ultimate end state, or do you envision an entire world ideally on Futarchy?
I mean, I'm biased, obviously, but I would say like entire world on Futarchy. I mean, yeah, like I guess it is heretical to say. I don't think democracy is that great a system. It is kind of like, as the quote goes, like it's the worst system except for all the others. Like it's really better than like dictatorship, where yeah, or like kingdoms. But there's no like axiom etched into the universe. There's no physical law that is the best system. And like we've seen very clearly, like we see very clearly the failings, which is like, yeah, in the U.S., only 37% of people even know who their congressperson is, right? And how many people know what bills their congressperson is voting on? Like, and the content of those bills, like very few people. Whereas you compare that to markets, like and traders, or like yeah, the typical analyst at like a hedge fund who understands far like a deep amount about the companies in their sectors that they analyze. So yeah, I mean, I think utter like full domination by markets is my like expected outcome.
And where do you draw the line here in between? I think people will probably look at something like Futarchy and see, some comparisons to something like prediction markets. And, I've been pretty interested with prediction markets in general, like watching, frankly, the moment that Polymarket had during the US election, I thought was super interesting, right? And it actually kind of hit home with me. I saw before, so XAI released their new model this week, and a day or two before, the odds of Polymarket on, there was a market. Will XAI have the leading AI, or LLM by end of February? And the odds shot up to 80%. And what was interesting to me about that is that's the functional equivalent of a scoop, right? If you're watching that market, if that move is that significant, what is that telling you? That's has to be some insider saying, hey, there's a high likelihood, right? Like that you should bet that XAI's new model is going to be competitive with ChatGPT o3 mini or whatever the latest model is. And so that's not actually that different to me than if there was some scoop from the New York Times of, hey, XAI rumored to be much far ahead of where you thought it was going to be and could be competitive with ChatGPT 3. The underlying credibility mechanism is different. In the prediction market case, it's dollars that people are putting on the line. In the New York Times case, it's the credibility of the magazine, right, and the organization. And right, like, because if they get scoops like this wrong, then eventually people won't trust them and their revenue stream dries up. So it's actually, in some ways, actually very similar to the economic security argument that you get for validators today. But without getting too far into that example, it's functionally looking very similar. And so I'm very curious in your mind, where do you draw the line in between? It seems like one of the things that crypto is allowing us to do is take a market-based mechanism that's historically existed in financial markets and apply it to other sectors like governance and media. So where do you kind of draw the line between Futarchy and something like prediction markets?
Sure. I mean, I'm a big fan of prediction markets. I love Polymarket. I'm a user of Polymarket. Um, and yeah, I guess it is pretty different than Futarchy, like what we're trying to go after, where, yeah, I would see prediction markets are kind of this two-sided platform where on one side you have people like me and other like people who are speculating, like you could call them degens or speculators, people who like have fun trading in these markets. And that is like the producer of information. And then you also have the consumer of information. Like during the presidential election, there were a lot of people watching the polymarket odds that were not actually trading in the markets. And so that's like, yeah, I guess that is kind of the how prediction markets work. In Futarchy, it's a little different in that, like, yeah, so I guess it wasn't like the U.S. government like wanted to know how likely people like different candidates were to win the election, and so paid Polymarket to run these markets so they could surface that information. It was instead just like it appears that people like gambling on the U.S. election or like betting on it, and people also like betting on sports, which is like where you've seen them go recently.
Mm.
And then that has this side effect. Whereas Futarchy is much more like, okay, an organization has a decision they want made. They want specific information relative to like what is the conditional value of each option that they can take, like which option is the best. And so they're like kind of paying traders to surface that information.
Yeah, I think that's there was a really influential post that I read when I was first getting into crypto called Markets Are Eating the World by this guy Taylor Pearson. And he was writing this in like 2017 or 2018. So a lot of, what crypto has become today, he didn't get super into the weeds or specific on it, but he connected this idea of markets driving more of capital allocation and societal level decision making, and sort of connected that with blockchain technology. And I think that the defining use case and win for crypto thus far has been capital formation in markets. And that's around money, but it's also around market structure and decreasing cost of issuance and things like that. And if you think about even how capital formation used to happen in like medieval times, right? It would be a monarch says, "Hey, I'm giving you this grant, Christopher Columbus. Go explore the New World. Open up the Indies for us," right? Like that. That's it was a completely top-down hierarchical sort of structure. And capital
Yep.
formation and actual societal level decision making was concentrated in this one very small group. And over time, if you zoom out and look at the way that this happens in the United States today, it's much more decentralized and markets based. And I think crypto just accelerates that much further. And when you decrease the friction of spinning up a market and participants engaging, you actually weirdly almost you can apply market-based mechanisms to things outside of just capital formation and price discovery. You can do it to things like decision making and like media and it's a super interesting, and content, right? It's a very interesting idea, and I can see why you got pilled on it so hard. It's definitely fascinating, and I think follows the general historical trend. Namada is the shielded asset hub rewarding you to protect the multi-chain. Built to give you full control over sharing your personal information, Namada brings data protection to existing assets, applications, and networks. Namada ends the era of transparency by default, enabling shielded transfers and shielded cross-chain actions to protect your data even when interacting with transparent chains. Namada also introduces a novel shielding rewards system. By holding your assets in the shielded set, you help strengthen Namada's data protection guarantees and collect NAM rewards in return. To learn more about Namada, follow the link in the description below. Ledger is the global leader in digital asset security, trusted by 7 million users and securing 20% of the world's digital assets. In recent years, Ledger has built a comprehensive ecosystem of products and services, making digital ownership more secure and accessible for everyone. Ledger's newest devices, Ledger Stacks and Ledger Flex, introduced the world's first secure touchscreens, making it easier and safer to manage your assets. Alongside Ledger Stacks and Ledger Flex, they have also launched the Ledger Security Key app, offering a safer alternative to traditional password management. Follow the link in today's show notes to get started with Ledger today. One more question for you on the sort of higher level societal side of things before we get into, I want to start to zoom in and ask like why crypto and MetaDAO and talk about what you're building. So one of the historical criticisms of Futarchy has been on this idea of societal values, right? Like there would be a lot like if you were to just ask everyone in the US today, what is the objective function of government? You probably get a lot of different answers. And so that's forced critics right over the time to be, or the past, since Robin Hanson introduced this idea to say you can't really define what this is. But I wonder actually to present the other side of that, if that is actually a positive forcing function, because you see that now a lot with what's going on with Doge, right? A lot of this discussion around Doge is people are getting very upset about it. And I think the underlying reason why, you hear people think this is literally saving the government, or they think it's the worst thing in the world that it's dismantling the government, is we haven't decided as a society what the objective function of a government should be. And I wonder a little bit if Futarchy could be a forcing function there, where it forces an entire nation to align on what that is. Like, how do you think about the historical criticism there, and then just society coming to agreement on the objective function of government?
I agree with the criticism, which is that, yeah, like I'm not super bullish on the US, like every citizen kind of aligning on an objective function. It's definitely possible, but like, yeah, I'm much more, I guess, if you look at like development of technology historically, with a radical new technology, like the internet, like it wasn't Walmart.com that really capitalized on that, or like Blockbuster.com. It was like the new entrance that capitalized on this new technology and became the new replacement of the old thing. So I think I'm more bullish on alternative institutions, which come to the objective function pretty early on. Like it could be, and I frankly think like token, like it's pretty hard to improve upon value per token. Like yeah, Umbra Research, which is this like Solana research group, they published this post about Futarchy where they talked about like advantages and disadvantages. One of the things they talked about there is like token price is like such a good objective function for a number of reasons. But yeah, like you could also have alternative institute like network states, for example, that use some other objective function. Like Robin Hanson has talked to me about potentially using like the value of a passport. Like imagine you have a country that allows people to freely purchase passports, like you can trade your passport. Then the value of that passport is kind of a good proxy of like how nice it is to be a citizen in that country, or like a resident of that country. And so it might be a pretty good proxy for just like what we actually want, which is some societal welfare function.
Mm.
Yeah.
Okay, so final question for you here on the society level stuff is, this is the Milton Friedman thing that the only thing that a corporation should care about is its profit or share price, or I can't really remember, right? But it's a very well defined objective function, which is oriented towards generating profit. However, where the rubber has met the road with that in real life, which generally I'm mostly a fan of. However, I do think you need some sort of countervailing force because you've had these horrendous societal level decisions that companies have made. Like, I'm maligning someone here. I can't remember if it was GM or Toyota. I think it might have been Toyota. But an example is they made a bunch of Camrys or something like that, and they figured out that there was a critical failure around the brake, and they ran a cost benefit analysis of shipping out the cars with the brake failure and paying the lawsuits of people who died or recalling it. They found it was more expensive to recall, so they shipped it out with the brake failure. Bad stuff like that, right? Companies understanding that their chemical pollutants are poisonous, right, and not doing anything. There's like a bunch of examples of this, and historically we've needed, because if the share price is ultimately determined on profits, that actually bumps into an overall societal level good, and that's where government is supposed to sort of step in. And so, how do you get that sort of countervailing force, I guess, if we're moving everything entirely to a market-based system? And then actually, something I just thought about, maybe because Trump just launched a meme coin, is if share price is like the ultimate good aligning sort of thing, do we end up with like a US coin, and then we make the US coin the the defining? Because right now we actually don't have the ability to do a share price type metric on a country. So maybe we can start there from the share price on a country observation. Do we need like country equity or country share price or something like that? And then what do you think
Mm-hmm.
about the countervailing force of government if everything is markets based?
Sure. And have you ever read Snow Crash by Neil Stevenson by chance?
Mm-mm. I got
Okay.
it on my bookshelf
Uh,
here, but I haven't read it.
gotcha. Well, yeah, I think I actually, I would push back on the idea that I think like that is, I spent a lot of time thinking about what's the best objective function for a futarchy. Like, yeah, do you want to use token price or do you want to use like another alternative is you have everyone who's a member of the organization self-report like how happy they are, and then you have financial contracts that pay out relative to that self-reported happiness, and then you bet on how given policies would affect that happiness. Uh, I I don't know. I think like imagine a world where there's one futarchy that like one called one world government that controls everything, and this entity has a token, and we measure the token in we measure the token in terms of like how many commodities in like some inflation adjusted metric. Essentially, for like technical reasons, you actually at that point can't use like a currency like USD. But yeah, you have some like inflation adjusted metric. Um, then what is the futarchy actually optimizing for? And then yeah, you have all these people who own these tokens. So what the futarchy at that point is optimizing for is the amount of stuff per token, like the amount of goods produced per token. And like I like the idea of a post scarcity society, so that at least is appealing to me. Um, yeah, I guess defining objective functions is hard. I apologize if I'm kind of rambling, and it is because it's just like it's like normative economics versus positive economics. Like normative economics is pretty hard because uh, it's really hard to say like what should happen. I can just say I like token price as a good objective function.
Cool. So in this instance, then, are you advocating for like, in order for this to take place or for futarchy to apply to a government, you would need some form of like bonds are the closest thing that I could, if you didn't have a country token, like some form of equity, it would probably be bonds, right? That you'd be like optimizing something around, because that's basically what bonds are in a sense. It's a bet on the growth and stability of the country. But in order to optimize for share price here, would countries need a token?
Yeah, countries would need a token, and
Got it.
that's why I asked you if I'd read Snow Crash, because yeah, he paints like a picture of a world where everything is kind of a corporation. And I think that's a very like possible future.
Interesting. Okay. All right. Let's move on here to, I want to discuss where crypto intersects with Futarchy. So, I think we were kind of getting at it, or when I was rambling about what I like about markets and crypto and all that type of stuff. But walk me through this idea of Futarchy, which was pioneered by Robin Hanson. I'm assuming completely independently of crypto because it was from a while ago. But connect this idea of Futarchy and crypto to me.
Sure. So like, what does Futarchy look like in practice?
Or like, why is crypto a good natural fit for this idea? Yeah.
Yeah. Okay. Yeah. So Robin Hanson did invent Futarchy in 1999. Another term for it is decision markets. And yeah, and it hadn't been done until MetaDAO, which I guess launched like a year ago. And I think a big reason for that is regulation, right? And this is like, in my view, this is actually the core defining property of crypto as a whole. Is like regulation or regulatory resistance, like regulatory arbitrage. I think some people are like, oh, crypto is just regulatory arbitrage. It's kind of like a put down. I actually think that's kind of a good thing, right? Like before Bitcoin, we had BitGold, and it got shut down by, I believe, FinCEN or like they got shut down by the government because it was an unlicensed money transmitter. So Bitcoin is an unlicensed money transmitter, and yet it hasn't been shut down. And I think one reason for that is because it's decentralized. And yeah, like if you were to do this in a non-crypto world, you'd have to ask for permission. Like you probably have to go to like the SEC or to like NASDAQ or whoever lists these. Like if you want to do Futarchy for a company, you'd have to work with all these people to get these markets working. You probably have to apply for a bunch of licenses. Like in the US, you'd have to apply for the money transmitter licenses. And that's like really cumbersome. Whereas crypto, just like a solo dev like me, can develop the smart contract and then publish it on the Solana blockchain. I think that's like a core unlock. So yeah, I think that's like the reason why it hasn't been done.
Hmm. So walk me through what MetaDAO looks like in practice today. So yeah, talk me through kind of like the project, right? Because I think most people kind of have a general sense of, all right, there's MetaDAO and it's bringing Futarchy to crypto in some way. But walk me through, funnily, almost like what the business model of MetaDAO actually looks like.
Sure. Yeah. So MetaDAO is the first Futarchy DAO, and it's also like its main business is servicing other Futarchy DAOs, which is kind of recursive. But yeah, like the goal is kind of to rationalize the world through market-based decision making, and like yeah, originally I believe the way to achieve that would be to just build a DAO that was governed by Futarchy, because I believe other projects would probably not want to adopt Futarchy. Now I believe other projects do actually want to adopt Futarchy. And so like, yeah, we service other DAOs. In terms of business model, so we don't make money today. There are like a few ways ways we can make money. But the goal right now is to like prove that the model works, right? Like MetaDAO is kind of selling a signal, which is this decision-making signal of whether or not like you kind of put the decision into the machine, into the MetaDAO machine, and outputs a signal like, should you do this or not? Or like, which option should you pick? And a signal could actually be extremely value destructive or value accretive, depending on if it's a good signal or not. And so my main goal right now is like first proving that the signal works and that it's valuable, and then we can figure out like how to capture value by providing that signal.
Traders, AI enthusiasts, and degens, listen up. The game is changing, and Desk is leading the charge. To celebrate their launch, Desk is running a trading campaign with 3 major highlights. 38% of their token supply will be allocated to airdrops. They're offering the lowest trading fees on Earth, and finally, they will be running a Desk referral program. The more people you invite, the bigger your rewards will be. To get started, click the link in the show notes below and make sure to follow at Trade on Desk. This episode is brought to you by Morpho. Morpho is the first and only DeFi protocol Coinbase has integrated directly into their main app, giving millions of users access to borrow against their Bitcoin on Coinbase. Just as Web 2 companies like Google, Amazon, and Meta were built on internet protocols, the largest financial companies of the future, such as Coinbase, will build on decentralized protocols like Morpho. Whether you're an individual, fund, fintech, or institution, Morpho is for you. Follow the link in today's show notes to try Morpho today. Okay, so this is I want to ask you a little bit more of the specifics of like this idea of a launch pad here. And when I think about the existing governance structures that have taken over, especially in something like Ethereum, we kind of just said, hey, we really like this idea of something called a DAO, right? Which isn't a corporation. There aren't these concepts of limited liability and hierarchy and things like that. I think a lot of people got really pilled by this quote that Vitalik said back in 2017 sort of time frame, where a corporation, he had this really great quote about Uber, right? Where a company, sort of centralizes value and sucks it up towards the top, whereas a DAO actually pushes complexity and value out to the individual Uber drivers, right? Like, and everyone kind of loved this idea. And what we wound up with was a whole bunch of basically one-to-one democracies, and not an enormous amount of hierarchy, which has been, I think, maybe in some cases successful, in many others very challenged. But there was never like one entity that really facilitated the creation of DAOs outside of some of the infrastructure, like the Aragons of the world. But it strikes me that in the Futarchy case here, we have a very interesting, compelling new form of governance or decision making at a company, and actually kind of like a an entity which is helping to facilitate that. And I would really love to describe this kind of idea of like a launch pad. So like walk us through how that actually works in practice. And
Yeah, sure. And yeah, I guess a lot of us remember ICOs, which happened mostly around 2017, 2018. And ICOs didn't really work. Vitalik has a blog post where he talks about why. A big reason was essentially like you have this new team, or actually, let's first talk about how capital formation works in the traditional world for new technology projects, which is mostly in Silicon Valley. I think like 60% of all venture capital investors is invested specifically like in the Bay Area. And how it works there is, yeah, you have like a bunch of people who have an idea, and then they form a company, and then they sell off equity gradually to venture investors who then invest money into the business, into the company. And for every next round, like if you raise money for the seed stage, in order for you to raise a Series A, you need to prove to the investors like you've actually done something useful with the money, right? Like you have some growth, or like even if it's not growth, like maybe you're building a really capital intensive business, like you're building a new airplane or a new type of car or something, you still need to show something to investors. And so you can't just like one shot you can't just like go raise money once and then never come back again. And that forces you to be pretty disciplined with how you spend your money, and how you allocate your time, because you either grow or die. And then ICOs happened, where it is actually like most of the ICOs were one shot capital formation processes, where it's just like, okay, you have a team with an idea, and then they go raise $20 million worth of ETH. And it's all pretty much within the team's control. And so if the team just like starts faffing off, or like hangs out at Zuzulu, like you can't really do anything about that. Like it's already all invested. You can't really get that money back. Even ironically, Aragon, which itself was supposed to be a DAO project, and had this really good like launch video, and just like built up a bunch of hype and caused a lot of people to invest their money into their ICO. Even they like didn't really want to give that money over to the Aragon DAO so that people could get their ETH back, because that's what people wanted to do, because they saw it as like, yeah, they didn't need that much ETH. I think it was like $200 million worth of it at the time. And yeah, like that's not a very effective capital formation process, I think, because incentives matter a lot, and those are pretty poor incentives. They essentially just incentivize you to like be really good at writing a white paper, or like shilling your idea, and not at actually building or growing a business. And yeah, so what we're building, or like the idea, is to have it so that, yeah, say you have an idea, you post it on MetaDAO, and then anyone can invest money into that idea, and it doesn't go to you. It goes to a Futarchy DAO. And everyone, like in the capital formation, everyone in the investment process gets the same price. And so, like, yeah, say you and me and a bunch of other people invest in this new project that's building like a new type of protocol, for example, on Solana. And then if the team rugs, like they just walk away on day one, then anyone can just raise a proposal to liquidate the treasury and get the money back, right? Like in NFTs are probably even worse capital formation process than ICOs, where like a lot of times you'll have like these memes of like, oh, the founder just died post mint or something, like, and then they just walk off with the money. So that can't happen. And then also, yeah, if like the team is failing to execute, then you can still like you can essentially return the money back to the original people who invested. So like, yeah.
Can I question though? So what does the actual infrastructure that supports Futarchy here look like in practice? Because I understand in principle the idea that people could just take a vote, but the other thing that I mean, one of the owners of these DAOs that, or sorry, someone at a DAO that's maybe sitting on a multi-sig could collude to just empty the treasury and walk away, and then you can vote to your heart's content, but you might not be able to get those funds back. So what is the actual enforcement mechanism here for Futarchy that prevents some of what you just described?
Yeah, so it's not going. I know today DAO is kind of a funny term because it does get used for these like multi sigs, but here the money that's being raised is actually going to an on chain account on Solana, who can only be moved like where funds can only be moved out of that account if someone raises an on chain proposal with an SVM instruction, say like move funds, and the time weighted average price in the pass market is higher than the time weighted average price of the fail market. Essentially, if the market believes that it's good for the value of the token to do something. And yeah, so like it is actually custody in the on-chain DAO.
Got it. Okay, cool. And now that kind of leads me to my next question, which is why, I'm curious why Solana. Why did you pick Solana here? Is there something about what the chain support, maybe just in turn? I know governance has actually been a little bit challenged on Ethereum, well, for a couple of reasons, but also just because of the cost of voting and things like that, right? It's just, on-chain votes were expensive. Maybe not now, but they used to be. So is there some sort of technical reason to choose Solana here? Or was it just like that's where you saw momentum was going? Yeah, let's just start there.
Yeah, there were, I would say, technical, strategic, and like vibes based reasons for going to Solana. The technical reason was, yeah, most DAO money today is on Ethereum L1, and you can't do Futarchy on Ethereum L1. Like you just can't have every trade be like a $250 cost, or I guess it's not currently there, but like at the time it was. And you can't have that much friction for participation in governance. Um, so that's the technical reason. The vibes based reason was just I really admired what was going on in Solana and the way of like shipping things, which I thought was closer to Silicon Valley than crypto, i.e., closer to a model that works than a model that doesn't, or is like historically not. And then the strategic reason was, yeah, at the time this was like post FTX, people were really sour on Solana. Like a lot of my friends saw it as a joke, and I like, yeah, in markets to make outsized returns, you have to be both contrarian and right. What that meant in practice here was that I believed that there was like a lot of future opportunity on Solana relative to the number of teams building on Solana. I.e., there'd be like more opportunity for me and for MetaDAO on Solana.
Mm. Okay, so maybe, as we're starting to wind down here, talk to me about where Futarchy is implemented in practice today, and what some of so you mentioned MetaDAO and Sanctum as being the two examples of things working live, but I also know that Jito's grant program used Futarchy to vote on who gets grants and for how much. And so, my dual question to you is, what is the current state of adoption and usage look like? And then again, on the business model side of things, when you see when Jito's using Futarchy in its grants program, is that somehow revenue that's flowing back to MetaDAO, or what does that look like?
Yeah, so there have been 60 decision markets created. A little less than half of those have been MetaDAO, which means that a little more than half of those were other DAOs on the platform. And yeah, in terms of the names, people who have created proposals through MetaDAO, it's Marinade, Sanctum, Jito DAO Drift, as and Or is like the main ones, and then we also and Dean's List, Cole, Future DAO. And yeah, so those are like the names using it. I call that specifically Sanctum and MetaDAO as the two orgs that I would consider full Futarchies, in that they're using Futarchy for all their main decisions. So like business decisions and tokenomics decisions, like where to allocate tokens. And the other orgs all use Futarchy in like some respect as like some part of their governance. So yeah, like Jito, for example, used Futarchy to decide whether or not to turn on the Jito fee switch, so whether or not to start distributing value back to the JTO token holders. They are also using it for a grants program for the restaking product. Drift has used it for a bunch of their grants. Marinade used it to make an economic decision around uh, the way that their like LST validator system works, or uses it for like used it to decide their mining emission, like essentially tokenomics, and then also various mostly tokenomics decisions actually for more. And then yeah, so that's kind of like how people are using it today.
Nice. Anything, give us a sense of like the future roadmap here and like what you're excited for. So, what in your most optimistic case, because I was originally circling back to the top of this episode, and the theme is everyone's very gloomy at the current moment. You know, everyone's bags got wrecked. Everyone's very bearish on this year from a token price perspective. There's this kind of nihilism idea that we didn't really do anything here with meme coins. I'm just so not in that camp. So, talk to us a little bit. Get us gassed up about Futarchy and MetaDAO. Like, where do you hope that the business is, on a 2-year time horizon, but also sort of paint us a vision of the future. Like, what in your most, sort of wildest expectations are we looking at from a Futarchy perspective on a 3 to 5 year time horizon?
Sure. I mean, I guess this could fix global capital formation. Like, yeah, my odds are currently above 80% that Futurkey actually works. As in, it's like a solid system that can actually make decisions like fairly effectively. Um, and if that's the case, then just naturally over time, you would expect organizations that adopt Futarchy to just become more prominent, right? Like if organization A has a return on invested capital of 8% per year, and organization B has a return on invested capital of 20% per year, it's not going to be very long before organization B is just like completely squashed organization A, or just like grown far beyond it, both because people will allocate more money to or capital towards organization B, and it'll just like naturally grow that capital faster. Um, so yeah, like the long term, I mean, the sky is the limit. This could totally change. I believe probably will totally change the way the world works and the way that we all work together and like make decisions. I would say like short term, like next 2 years is fixing crypto decision making. Like DAOs have not really worked out in the past, and like fixing that I think would be a great first step. And so yeah, I'm also. I mean, I think there's like reasons to be jaded, but also uh, it's like a one event problem, right? Maybe you don't even believe Futurkey will be the thing that works, but like you kind of have to admit that like anyone kind of has to admit there is some non-negligible probability like that Futurkey actually does work, and conditional on it working, it would be like a huge thing. Um, and yeah, so like given that, there must be other ideas that people are perhaps building right now that just have not come to the light yet, or uh, people that like ideas that haven't come up yet, like haven't formed yet, or projects that haven't formed yet that could also affect the world in the same way. So yeah, I mean, it only takes one. It's basically I think like the bull case.
Hmm. All right, man. Well, that's very, very exciting. And, if folks that are building on Solana here or are just interested in learning in Futarchy or following the progress of MetaDAO, what's the best way to either follow you, learn more about the project, or whatever it is?
Yeah, Twitter. So yeah, if you want to just follow, like Twitter is where we post everything. So that's a good place. If you want to build, I believe you as a founder should build on this launchpad system because um, like you will benefit from doing that, both because you'll be able to raise more money through the system, but also because, like, and I believe this is the more important one, you will have a community from day one that wants you to win. So yeah, if you are a founder that is early stage, like it could even be like pre-raise, like, or pre-idea, it could even be. I would please encourage you to reach out to me and talk about how we could potentially do that.
Excellent. All right, Proph3t, it's been a really great time chatting with you, my man. We'll have to do a 6-month or 12-month check-in to show why being optimistic pays, and definitely rooting for what you're doing at MetaDAO and Futarchy. So yeah, man, we'll have to do it again sometime soon, and thanks for coming on the show.
For sure. Thank you so much for having me on.
Cheers, man.